For the last 4 years, I have been a full-time day trader and I tested every single strategy that actually exists, and I was failing for years until I found one strategy that clicked for me and changed everything. So in this video, I'm gonna show you that exact strategy step by step with the real execution. So by the end of this video, you're gonna have a clear system that is proven to work. So real quick, before we go into the strategy, I just want to show you my results, because with using this model, I made more than $30,000 last month. You can see every single trading day was documented and I ended up with almost 90% win rate for that month. Week 1 of using it, I made almost $10,000, week 2 I made more than $10,000, week 3 was kind of break even, and week 4 was 5k. But as you can see, I didn't trade every single day, but when I took a trade, it was perfect A+ setup. So in trading, less is more, and if you know how to wait for those perfect conditions, you can easily become profitable. So goal of this lecture is gonna be for you to learn to apply proven and repeatable strategy that actually works. Also for you to have a rules-based system that works every single day when you come to the market without any hesitation or without guesswork, because if you have clean rules that you need to follow, there is no second guessing. And the last one is gonna be the most important one, to become consistently profitable day trader. Okay, so let's start with the actual strategy. First of all, you need to understand throughout this whole presentation, S is gonna stand for structure, because every single time when you come to the market, you're gonna see that market is either moving to the upside or market is moving to the downside, which means this is bullish structure and this is bearish structure. That's gonna be the core concept. In this case scenario, you can clearly see that market is moving with a good displacement to the upside. So after the structure, we are gonna have letter C, which is gonna stand for correction. Every single time when market moves, let's say in this example over here to the upside, we are gonna have small correction, which means market is gonna pull back and then one more time break structure and continue that direction. But the main reason why I'm actually showing you correction is because you need to understand that market is never gonna just move to the upside in one direction without any meaningful pullback. So every single time when you see that market is moving to the upside, we are gonna have pullback, and pullback is gonna be the most important thing. So as you can already see, we are forming a setup: structure, correction, structure to the upside. And the main reason why I told you that correction is gonna be the most important one is because when market made a pullback over here, we left liquidity. Liquidity is nothing else but the orders. So many stop losses from all the traders around the world are placed here, which means money is resting underneath this low. And as you already know, more than 90% of traders are losing money in the market, which means 10% of them are on the opposite side of the market and they are making money. So this low over here, this low, and this low over here are just liquidity levels waiting to be swept. And that is where our final move appears, which is gonna be M, and it's gonna stand for manipulation. And it's gonna just sweep the liquidity, meaningful liquidity in the market, and manipulate all the traders who knew the buzz, who knew the direction. They were in a bullish trade, but they placed their stop loss underneath the swing low. And right now, many traders are gonna see this as a bearish move, and they are gonna start to FOMO and enter short positions. And the reason why actually manipulations happen in the market is because if market was really moving like this, higher highs, higher lows, higher highs, everybody would make money, everybody would enter a trade here with stop loss underneath the low and target to the upside, and everybody would be a millionaire. But that's just not how the market works, so you always need to wait for those manipulations. But the good thing about this is that manipulation is really easy to spot, and if you are patient enough to wait for it, you are almost always gonna see it. And as you can see, after we manipulated this low, after we collected the liquidity, fair value gap is gonna appear, and it's gonna be bearish fair value gap. And imagine if we are truly bearish, like almost everybody thinks right now after we broke the structure over here, this fair value gap should hold the price and we should see another move to the downside. But the thing is, we are not gonna respect this fair value gap because that's not logical. We already swept the liquidity and we are bouncing from this bullish fair value gap, which is still holding the price, which means we are respecting bullish ones and we are disrespecting bearish ones, and our new drawn liquidity, our new target is gonna be the opposite liquidity. So this was one liquidity level and this was the opposite liquidity level. So once we swap the first level, we're gonna target another one, and that's gonna be again our structure. So once you see the sweep, aka manipulation, the first fair value gap that presents in the market needs to be inversed, and then you're gonna take a trade immediately after the closure without any hesitation. You're gonna put your stop loss underneath the last candle and you're gonna target the opposite liquidity. And usually it's gonna play very fast towards the take profit, because this is how the market actually moves. So let's put everything one more time together. We're gonna mark out structure out on a 15-minute time frame. This can be on a 5-minute, this can be on a 1 hour, but 15-minute is just something that I like the most. And usually most of the time that means that we are gonna mark out liquidity on the same time frame. So you can see our highs, our lows, our highs, and the meaningful liquidity is gonna be this low, and the meaningful liquidity is gonna be this high. And after we have everything marked out, we are just gonna wait for the manipulation to happen, and this is gonna be the manipulation over here, and then you're gonna look to take a trade. So entry is going to happen after disrespecting the last imbalance in the leg. Like I told you, it's always gonna be the inversion, aka disrespect of the fair value gap, and this is how it is actually gonna look like. So you don't want to see wick like this with a body closure over here. You always want to see fat body closure in order for you to be 100% sure that we are bullish or bearish. And then entry on the close, put the stop loss below and wait for your take profit to be hit. And like I said, you can target the opposite liquidity or you can target fixed risk to reward. So this is how it's gonna look like after we put everything together. Make sure to screenshot this to never forget it. Also, before we go in the live examples, we have some key rules that I need to tell you, and the first one is gonna be trade within market open hours every single day from 9:30 AM Eastern time until 11 AM Eastern time. This is the time when big banks and institutions come in and when market moves the most. Second thing, it's gonna be trade only one instrument, and the reason why I'm telling you this, yes, it works on everything, but once you master one pair, you're gonna be unstoppable. And the last one is gonna be trade only with clear structure and clean manipulations. And remember, not every single day it's gonna be a trading day. So when you don't have a clear structure, don't even look to take a trade, so in that way you're gonna avoid many losses. Okay, so right now once you know how the strategy works, it's gonna be time for some real examples. Alrighty, so for the first example we're gonna start from the 15-minute time frame, like I told you from presentation, and one can you spot over here. You can see that we have this high and we have this low in the market. So we are waiting for either one side to be swept, and then we're gonna look to take a trade. But if you really pay attention, you can see that previous high was here and the previous low was here, and what market did, market broke the structure, which means this is our structure actually, lower high, lower low, lower high, lower low. So right now we are waiting for that correction and manipulation to happen here, and then we're gonna look to take a trade targeting the opposite side. So this over here was the actual 9:30 candle when market opened, and right now we are just waiting for this range to be swept. And if I play the price, you can see how it looked at the beginning of this candle open on the 15-minute. But the thing is, if you are really patient and if you wait, you're gonna see that this is just pure manipulation to stop everybody in the market and to move to another direction. And do you see how this candle closed and how this candle looked in the beginning to manipulate all the traders? It looked like this, but at the end, if you waited, you can see that this was pure manipulation, and we are just gonna stop out everybody who is in a short position with the stop loss here, trying to target some new lows. Okay, so once we know that, once we know the hard time frame, we're gonna scale back to the lower time frame, let's say 1, 2 or 3 minutes, and we're gonna look to take a trade. And the first fair value gap is gonna be presented here after the sweep of liquidity. So this was the main sweep, and this is the first bullish fair value gap. So if you are truly bullish, this bullish fair value gap should hold the price. And just to make sure that we checked all the time frames, to be even more confident about this trade, we're gonna go on the 1 minute. As you can see, this is the 1 minute fair value gap. this is gonna be the 2-minute fair value gap, and the 3-minute fair value gap is gonna be the exact same. So we have aligned all the time frames. So now what we are gonna do, we are just gonna wait for either market to disrespect this fair value gap or to break structure to the upside. In case that it breaks structure to the upside, that means that this bullish fair value gap hold at the price and we are not correct about the drawn liquidity. But in case if we see disrespect of this bullish fair value gap, which is exactly what we saw over here, that means that we are correct about drawn liquidity and we're gonna place our trade immediately after the closure. We're gonna put stop loss above the last candle high and we are gonna target the opposite liquidity, or you can even target 1 to 2 risk to reward. And as you can see, this is how it played out. Also you can see that the bearish fair value gap over here hold the price, and that is only because we were right about our drawn liquidity, which was this low over here. And not only that this bearish fair value gap hold the price, but also this one hold the price, and that's why market hit this final take profit. And do see what happens after we hit our take profit. Market immediately starts to reverse because every single drawn liquidity is already taken out, which means you are done for that day. And as you can see, entry for this trade was around at 10:20, which means we are trading our best hours. Okay, so this example it's gonna be interesting one because you can see we have high, we have high low, and we are anticipating that market is gonna create a new high. But before we know that market is gonna hit this high, we first need to see some sort of correction or manipulation. So what I'm gonna do, I'm gonna mark out the meaningful high on the 15-minute time frame, and I'm gonna mark out the meaningful low on the 15-minute time frame. Also, if you want to use maybe 5-minute time frame, you can still see that it is the same thing. This is the meaningful low and this is the meaningful high. So it doesn't matter which time frame you are using, but 15-minute, 1 hour and 5-minute are gonna work the best. So what we are gonna do right now, it's still not 9:30, so we're gonna wait for that 9:30 to hit for that manipulation, and then we're gonna take a trade. So we are still waiting, and here you go. This is your 9:30. Right now this look like it broke the structure here, but the thing is, we know that we need to wait for that last candle closure, and as you can see, this is how it's gonna look like at the end. It is not break of structure whatsoever, it is just manipulation and correction. So what I'm gonna do right now, I'm gonna scale to the lower time frame, and as you can see on the lower time frame, we already had an entry on the 3-minute, 2-minute time frame and 1-minute time frame, because we inversed all of the fair value gaps, which means without any hesitation I'm gonna take a trade here immediately after the closure. And for this time I'm not gonna put stop loss all the way underneath the last candle, because if I'm targeting the high, it's not gonna be even 1 to 2, so I'm gonna optimize this stop loss and put it here, because this is such a good momentum and good closure, and market should not come all the way to the downside after the sweep. So I'm gonna place a trade and I'm gonna let the price do its thing. And as you can see, this is how it played out at the end. So do you see, I'm not using any indicators, I'm using just one line and one box to take a winning position in the market. So let's put everything one more time together. You can see structure, high, correction, high, and this over here correction was the actual liquidity, and this is where manipulation happened. And then we took a trade here on the lower time frame, targeting the new highs. It is so simple. So that's gonna be it for this video. I hope that you liked it, because this is honestly the best strategy out there on YouTube, and just smash the subscribe to never miss another banger. Peace.